Hi there, traders. This is Brad Gibble with the FX Market Insight for Tuesday, the 16th of June. All right, now the big news coming out of the market, the dollar's dipped and US equities were up. Now that news, I was just going to say, is attributed to the Fed. Now the Fed launches a couple of things. They've got their Main Street lending program, okay, for corporations and all these sorts of things. And they're also starting a program to buy corporate bonds, right? So this is going to add a huge amount of extra stimulus on top of what they've already done in the US. To me, it's pretty hard to work out whether they're doing that to offset the general risk environment with all the social unrest in the US, or if it's, because the rollbacks or the lockdowns, well, they're still talking the South, Texas, and a few other states talking about going back into lockdown. But overall, it's been a bit of a success, I think, so far. Now, where the whole risk appetite sort of comes back into play. So you look at the Fed and what they've done with this stimulus program, right? To me, this is out of left field. I didn't expect it, unless I've missed something completely. Now, it was a very muted move here on the US equities, up, the Dow Jones up 0.6%. You can see how much the Asian equity market liked it. So to me, this tells me that there's obviously other issues in the US going on besides, just the Fed. And that's probably all to do with all the carnage socially across the US. Then you've got the US equities bouncing 3.5%. Now that's pretty huge. Now what we're going to see is, the US dollar is drifting lower, right? This takes the pressure off the whole system. The chance of defaults, etc., carnage on the coronavirus. The US safe haven trade is off the table. It's a massive risk-on situation. So what we've seen is the Aussie sort of bounce. You've seen the Kiwi bounce. And this is from Friday close, Monday opens in these pairs. Euro and sterling all bounce. Now, dollar yen, you can see it is hardly moving, right? I don't think the market knows what to do with dollar yen at this stage as far as a safe haven. Is it the US dollar or is it yen? It looks like it's been totally diffused. And what we're seeing is obviously CAD also rally, which is pushing obviously dollar CAD lower, and that works in with a stronger oil price there as well. So a bit of toing and froing. Now, I think the euphoria in the Asian market is, I think it's going to be short-lived, because when you look at the general news, there's a massive spike of, there's coronavirus infections and things. It's hard to keep up to speed with what's going on. The Chinese are trying to curb or stop the spread of the coronavirus, across Beijing and the rest of China. So that's going to be something, to me, that's a risk situation. So you wouldn't be buying equities on that, but you know what? Stranger things have happened. Funnily enough, Chinese equities are only up 0.8% as opposed to the Japanese equities. Now, what does that do for us? Now, if I just bring you back to the Forex Daily Market Insight page, I can actually sort of give you a bit of an idea of what I'm seeing right now. So most of the dollar pairs, there's no major significant move, right? Dollar yen, dollar CAD, dollar Swiss, to me, still uncertain which way they go. And that's because of that indecisive move on the US equity markets. 0.6% is pretty much hardly anything on major stimulus, right? So this is the weird thing. Now, I can still see the Euro, Aussie and Kiwi going down. Sterling, well, it's doing its own thing, right? So to me, it's out of the game for the moment because you can't really tell what's going on there. Now, this is what I'm sort of expecting. Now, particularly the Euro. Now, Euro broke down through 112.90 on Friday. Resistance is currently just above 113.30. If anything, it's just sort of messing around with that level. I can see this thing popping higher and drifting back down. If, and this is all the big if the US equity market doesn't rally tomorrow, which I think with that muted move is a big possibility, then these moves that we're seeing today are pretty much a dead cat bounce, right? So what I'm sort of thinking is, especially the Euro, maybe a bounce up to 113.80. And once it's all said and done and the euphoria of this action by the Fed is out of the market, we should see Euro break back down, and that'll take out the stops above that, above 113.5, and we should see it fall. Once again, risk on appetite, okay? Equities rallying, Aussie and Kiwi higher. if the equity markets turn around tomorrow as well in the US, well, then you should see these moves corrected straight away. Of course, if the US equities rally tomorrow, then we're going to see these moves continue. Now, the setup on these trading opportunities that I'm sort of looking at is it's actually sort of factoring in a move back down in the equity market. So if these trades don't get triggered, you're not at risk at all. So it's a bit of a trade. Well, you know what? The US equity market should have rallied aggressively. It didn't. Something else is happening in the back of the market. So if it doesn't, we should see the equities probably fall tomorrow, right? If there's no fresh stimulus once again, and that should see these currencies flip around. So to me, now's the time to start looking to trade. Not yesterday. Mondays are always problematic as the markets factor in the news overnight. Now, keep in mind also as we go through that next 24 hours, we get the UK employment numbers. Now, sterling to me is anyone's guess. It's very hard to work out what's going on. I'd really like to see some weak German ZEW sentiment numbers. That would give the underlying euro tone a bit of a negative pulse. US retail sales, well, this is probably going to be the catalyst for potentially the move on the equity markets. Weak numbers, do we sell dollars? Well, you'd think so, but stranger things have happened. To me, I'm just going to be watching the equity markets themselves and see how they play out this event. That's where things are at the moment. All right, guys, and the dollar index, well, you can see clearly it's not exactly like plummeting, but we have seen that rally, stalled, and then drifting lower. To me, that's after the Fed made their announcement. You know, less concerns about the US economy with all these Fed stimulus. But I tell you what, that could be very short-lived, especially in these markets, which are extremely dynamic and reacting to various geopolitical news. Keep an eye on the US state calls as they go to potential more lockdowns. We want to see how this the rollback of the lockdowns is going across the US. And on that, if I think because all the international borders are shut, you'll find that the spikes in coronavirus now in certain countries will be independent of, you know, all the correlations. So this is where a big chance for the currency crosses to come into play. Now, like for instance, if the UK had a massive spike, well, you'd be selling sterling crosses across the board, as that would impact the UK and not everyone globally like it did initially. All right. Plenty of things to look at as we go forward. All right, guys, have a good trade day. Cheerio.